All right, Candle Range Theory Trader, back with you with another video on just a week of review for August 11th through the 15th. So let's not waste time and get into it. So this was my initial watch list for the week where I had a bearish bias on all of these pairs. Now I'm not going to review every single one of them. Pardon me. As some of them gave setups and some of them did not. But let's take a look at some of the ones that played out and some of them didn't, because obviously no method is 100%. So what you're looking at now is last week and this week. I like to look at the last week to see what price did, and as well see if there's any possibility of reversal. So when it comes to weekly structure, if you're not sure what I'm talking about when I say weekly structure, you're going to want to pause this video, go to the link in the description, talking about how I look for weekly structure trades and what I'm looking for from a day-to-day basis. But because while it still is candle range theory, at the same time, there's a little more nuance to it in terms of catching tops and bottoms of where the we expect the market to possibly take a turn. So these first five candles, 1, 2, 3, 4, 5, right here is last week, and this is the current week here. These five right here. I should have put a marker between them, but oh well. So it's just 1, 2, 3, 4, 5. This is the current trading week where the analysis is coming into play. So I had a short bias on pound yen. The structure played out to be a classic expansion with a Monday. Oh, I'm sorry. Last week was a classic expansion with a Monday being the low of the week, which was right here. This was the low last week, and then it just straight rose. So because of this strong price action to the upside, I was expecting a pullback for this week. And what happened this week was a midweek reversal. So remember, with midweek reversals, we look for price actions to make the high of the week on Wednesday, and then Thursday, Friday being our ultimate payday. Best payday would have been Thursday when this candle was a solid red. It did drop 140 pips before retracing, and then Thursday put a little more price action, but the best day to get out would have been Thursday because price went all the way down and then came back up. So that you had a classic expansion week with Monday being last week's low, leading to midweek reversal next week. So that's what I was looking for. Now the opposite on this pair though, where this one just gave a straight rise, and that's why I wanted to include this because no method is 100%. You had strong price action to the upside, and then price just kept right on going. So there really were no short trades this week. There just wasn't. So my bias was short, but there were no entries, and it just kept going up. That can't happen. It is what it is. We keep going. Same here with pound dollar. We had a short bias on this one. While there wasn't a short trade, there was actually a long trade with a Monday classic expansion. Again, if you don't know what I mean when I say classic expansion, check the link in the description. But this was Monday's price action, went below Friday, closed inside of it, and then expanded to the upside for a couple of days. But because I had a short bias, I was not looking for this kind of trade, so I didn't take a trade there. This one here, which was pound Swiss, same thing, just price kept going. We had a strong bullish week. I was expecting a pullback this current week. Didn't get it. No trade there. Okay. And the reason why you may see this type of price action here with a high of the week on Thursday, but what I like to see is a high of the week being created by Wednesday at the latest. If the high of the week doesn't come in by Wednesday, I'm not interested in the trade. All right. Let's see. Next one we had last week was a prior week low on Monday, pretty much a straight rise. This week did give a Tuesday expansion to the downside, with Tuesday creating the high of the week. Price did go down a little bit and then just consolidated for the rest of the week. So there wasn't much there. Tuesday would have been the best day to get in and get out, but it was just mostly chop. So that's what that was. Next week here, and it was really the yens that gave the best trades for this week. But the yens last week, it had a classic Tuesday expansion, with last week having Tuesday as the low of the week. So when price opened, I was waiting for the high of the week to either come in on Monday, Tuesday, or Wednesday. It did hit on Wednesday. So this was the midweek reversal where Tuesday creates the high. Wednesday then breaks the high, closes inside of it. So Thursday is our payday. And it did drop 184 pips before coming back. So in this case, we had a Tuesday expansion that led to a midweek reversal. So that's what we like to see there. For Swiss franc, we had our prior week low on Monday and strong price action up. So with this week, I was looking for something to the downside, and it did create a midweek reversal. So here is this Wednesday candle that created the high of the week. It closed inside of Tuesday's range, did come up a little bit, but then dropped 188 pips. Special shout out to my youngest son for catching this because I taught my two sons how to trade. He spotted this one and made a decent return on investment for that one. So shout out to him. But this was a good trade. Next one was Euro CAD. This one did not give any action to the downside. However, it did have a just a basic candle range theory setup where this would have been the range candle here on Tuesday, Wednesday. I'm sorry, this was Wednesday. Wednesday is a very important day. But in any event, Wednesday's low was rated by Thursday and it closed inside of it. And then the expansion candle came. So that's just a regular 1, 2, 3 candle range theory pattern in line with the overall trend, which as you can see is long. Okay, all these, see how this day here was rated and closed above and price kept going. And then this low right here was rated and it closed above. So then price expanded to the upside. So even right here, so this peak formation low here, and sometimes if it's a trending market, you may want to try to employ the candle range theory here by Wednesday going into Thursday, Friday. But that's what happened there. So the trend was just long for the week. There was no real pullback that was worth trading. The main trade could have been right here. So that was it. Let's see this one here with another yen trade here. This one created a classic expansion, so this was not a midweek reversal because the classic expansion was on Tuesday. Last week we had our low of the week on Tuesday here, and then price going up. So then when Tuesday rolled around, it went up and then closed back inside the range and went down for the rest of the week on CAD yen. This was a 114 pip drop for the rest of the week. And the most important close that you want to see here is when you start to trade this is Wednesday's close. So if you're in right here near this high or even down here at this high, either way, if you notice that Wednesday closes below Tuesday, see how this daily close is below this low and below the weekly open, that is the strongest sign that price is going to continue in the same direction. All right. So just keep that in mind. Now, these were a couple of trades that were not on the watch list that still paid out. And the difference between these two trades I'm going to show you and the ones from last week are that this is just a standalone week. This did not take last week's price action into play. So this is just straight up 5-day pattern. What can I see? So this was Euro New Zealand. Monday created the low of the week. So you had Monday, Tuesday, Wednesday. Wednesday was the range day. Tuesday opened, went below Wednesday's low, and came up Thursday and Friday. Today's Friday when I'm making this video, and it went up 150 pips. So this right here was just your classic bullish expansion with the low of the week being made on Monday. So when you come to the chart on, say, a Thursday, for lack of a better term, if the low of the week is right here, and you come to the market and you see price has gone down and rated this low and starts to close above it on Wednesday, you may be looking for price to just continue to trend instead of a reversal. Because when beforehand, this was the former high of the week right here. So, but everybody who went short, who tried to think that the market was going to go down, these three right here, they got destroyed. Okay. The trend was long for this week. What's the number one telltale sign of that though? Thursday's price action. It went below this low and then started to close above it. That's the momentum that we look to capitalize on and take it to the upside. And then lastly, we had pound Aussie. This was a classic Tuesday expansion. Tuesday made the low of the week. So Monday created the range candle. Tuesday went below Monday's low and the weekly open. We love buying. All of our buying should take place ideally below the weekly open and below the prior day low. We get in there, and then price rose for the next 2 days after that with the 228 pips. And remember the close, okay? Tuesday's close was above Monday's high and above the weekly open. When you see that, it's lights out. You're safe to hold that trade for a couple days minimum. And this, you could have just taken this one trade here and done very well for yourself. So in conclusion, you really only need one trade to make this whole thing worth it. Just be sure don't force trades. Last week's price action doesn't have to factor into this week's trades, as I showed you on the last two pairs. Because when you have a bias, that's only what you think is going to happen, but not what's guaranteed to happen. I had a bias, but if it doesn't play out, then there is no trade. And sometimes the market is just trending. But even in a trending market, you can still make money whenever you figure out, like on this one, if the trend is long, all you're looking for is a range, the prior day low to get closed or to get rated and then close above. When price starts to close above the prior day low and you know the trend is long, do you just hop in right there and boom, that's it. You're just trading the trend using the candle range theory though. All price action is still based on the candle range theory. Okay. We're just including a weekly framework so that we know what to look for day by day. So don't predict what you think is going to react in. Don't predict what you think is going to happen. React to what you're seeing. React to what the chart is showing you. And again, just to use this as an example, again, remember that for EuroCAD, I had a short bias. So, but everybody who went short here thinking Monday the direction was short, when price springs up like this, and then the daily close is closed above it like that again right here, this is a strong indication that price is not going to go back anytime soon. Okay, anybody who tried to go short here this week got destroyed. So again, if markets start trending by Wednesday, if price hasn't turned around by Wednesday in line with your bias, if it hasn't reversed by then, try to look for a candle range theory setup that is like this. It raids a low and then just continues up. Okay, because it's already told you I'm not reversing this week. I'm just going to keep going in the same direction. But that plays out typically around Wednesday, Thursday. So if you go into the week with a bias and it doesn't play out by, like I said, this was Wednesday right here. This Wednesday gave no upside or no indication that price was going to reverse. Then you start looking for price action like this. Well, okay, I'm going to look. I'm going to change my bias, and I'm going to go long now. But I can only go long if price is ideally below a day's low and closes inside of it. Or a better trade is when price is below the weekly low and a daily low and closes inside of it. And I'll show you a quick example of that. It was on. I didn't take this trade, but it was Aussie CAD. Yeah, I took this trade, but then I got out for like a break even. I didn't take the whole thing. But I had a short bias going to this, but then I realized that this was a classic expansion week. So let me make this a little bigger. Right here, yep. See, so that's Monday, Tuesday, Wednesday, Thursday. Today's Friday. And notice right here, see how that right now is still the high of the week, but people who are still trying to short this, they're kind of out of luck. So I'm going to get rid of this. The best entry would have been about right in there by the weekly open. You're going to want to pay attention to, you can't really see it, but the weekly open below this day's low right here. Right in there. That's your entry. Okay, because why? Because Monday's low got rated right here. Okay, that's Monday's low. So this gives us the confirmation it's the expansion. Wednesday or Thursday was a pullback day, and it's already 1 o'clock on Friday, so it's probably just going to consolidate the rest of the day. But there are a few pips that could have been gained. But this is what I talk about when I'm saying you want to buy below the weekly open and below a prior day's low. So this is the prior days. This is a prior day low right here. So you're buying below that because the trend is likely still going to be long. So that's it. That's my whole spiel. That's the weekend review. Use these chart setups to help you in your own trading. I appreciate you watching and have a great rest of your day.